Hey, everybody. Welcome to This Week in Pre-IPO Stocks podcast. With me, I got Clint Sorensen, Chief Investment Officer at Wellshield, the outsourced CIO investment research company, Nick Fusco, CEO of 8View, a pre-IPO secondary market pricing company, and Evan Cohen, co-founder and Chief Operating Officer of Vincent.com, a media company focused on alternative investments. All right, fellas, big news last week is CoreWeave came in big, $19 billion post-money valuation. They raised $1.1 billion. So CoreWeave is like a cloud provider, right? But for AI specific solutions. So it's not like the AWS or Google Cloud kind of general solution. It's like cloud for AI, right? They're going to use their proceeds to increase their infrastructure and also expand into Europe. Coatue led, Altimer Capital, NVIDIA, and Fidelity also participated. So here's the question. Like, Clint, I know maybe we can start with you, man. Like, we always talk about where to access kind of the AI space. CoreWeave kind of falls into that picks and shovels type play, right? Do you like
Yep.
names like this, or do you kind of prefer the large language model route? Like, where do you kind of think about playing AI or putting your chips
No,
there?
I like the picks and shovels data route. And so if you think about CoreWeave in that instance, as here's the way I kind of foresee this playing out as everyone kind of develops their own AI output layer on top of their data sources or their platforms. I see a war of data, right? A war of platforms. Data is going to become exponentially more expensive, more valuable to the AI models that gobble this stuff up really quickly. And so a firm like this makes a lot of sense because it's not of the traditional platforms, right? It's not the meta isolated platform. It's not the Google platform. It's not the Amazon platform or the Microsoft platform. It's kind of their own. And I think that allows for a little more independence as it relates to startups and new people coming out that want to create AI and tap into a data source that may or may not be conflicted. So I like CoreWeave as a infrastructure play for sure.
Okay. And then, so Nick, I checked out ApeView. It's a little light in the secondary market, right? From a volume perspective, but are you hearing any buzz around the company? It's a New Jersey company, so East Coast, right, baby? Come on. But like, are you hearing any buzz around this company in particular, or kind of just any thoughts on the trading volume?
Hearing a bit of buzz, and I'm expecting there to be a pop. I mean, usually we're getting about an 8% discount in the secondaries, either a bit before or a bit after these big financing rounds occur. You're definitely getting some hype in this name. They're really aggressively going out and hiring. I know they've hit up one or two of my friends actually quite recently, and they're really uniquely positioned here. With you saw and mentioned NVIDIA being one of the backers, but they've been a backer since day one. I mean, these guys were doing their seed raise
Right.
at 1/300th of where they are right now, or less, actually, in 2019. So they're just on fire, and they have unique access to NVIDIA chips, and that's a great partnership to have right now.
Right. So I mean, NVIDIA did the full round trip here. It's one of those special ones that I think a lot of people have been talking about, right? So CoreWeave's a big client of theirs, and then they make an investment. So there's those investment dollars are coming right back, at least in some part, to NVIDIA. But Evan, so like, what do you think about, man? This is like, so these guys, CoreWeave did their last round, primary round, was in December, 5 months ago, at $7 billion. And now they're doing a round at $19 billion post money. My math has that as 171% increase in just like 5 months. That's a lot, right? Like, what kind of message do you think that's sending to the market? I mean, there's obviously demand, right? If they're able to command this type of valuation.
I mean, it sounds like the market is continuing to be very excited about putting their dollars toward backing AI in any way, shape, or form. Whether it's the picks and shovels, whether it's the big names, they believe this is the movement to invest into for the long haul. CoreWeave is a very interesting play for both the reasons we just heard from both Clint and Nick. I agree that having NVIDIA as a backer is it's a pretty unique and powerful backer behind you, especially because it can give you access to chips that potentially your competitors might need to scale. So I think it's an interesting cap table. It's an interesting investment. I'm not entirely shocked that we've seen such a massive markup in only 5 months, but at the same time, this is the way the market is going toward AI. And I believe at some point it's going to have to cool down. But obviously they were underpriced compared to a lot of their competitors. So I think investors want to get, spray and pray across the AI space. It's going to grow.
Right.
So this is where
Yeah,
investors want to put their dollars.
And just to add to Evan's point, a complementary version of the underpriced is, they're able to get their cost 60 to 80% lower than competition, just the way they're set up for their processing. So, nobody can touch that right now. And with the pace of the market, if they could maintain some of that gap in margin, they're just so well positioned, and hence where you can justify 100 to 200% increase in a span of a few months. So kind of outrageous here.
Right.
Slightly different side of the
okay,
same.
Just to add one piece to that, I do think that what we've seen over the last 5 months is somewhat a diversification of the market around AI. I believe last year, I believe the narrative was really focused on the big names, the big winners: Microsoft, Google, OpenAI, Amazon. And this year, especially the way that Meta has been able to, with their Llama 3 and their open source movement, really getting a lot of traction and demonstrating that you could have the diversified effect. I believe that now other investors are realizing that maybe it isn't just a winner take all market where just the big names are going to win. And I think that they're realizing that investing in the smaller names could have just as much upside versus betting on the big names today.
Yeah, well, there's this like constant dialogue around closed model versus open model for the AI large language model. So it's going to be interesting to see how those play out. The closed models seem to be more higher performing, but also, at least in OpenAI's case and a few others that I'm seeing, they're kind of pushing more towards that AGI type solution, right? Where the open models, I think, are kind of for the everyday man use case. But on that point, maybe shifting gears to OpenAI, right? So we got, they recently just in like today, they announced the deal with Stack Overflow. We're doing this on Monday. And then last week was Financial Times. So like Clint, you always talk about data, man. Like you're my data guy, right? But these guys are locking down deals, right? OpenAI is, with a lot of these kind of arguably core data providers, right? Is that like building a moat? Do you think that's building a moat for OpenAI? I don't really see other folks doing this where they're locking down deals. At least I haven't seen it. It just seems like OpenAI is the one that's out there cutting these deals.
Yeah, I don't know how exclusive they are. Do you know if they're exclusive or not? See,
I
I
don't
think
know.
that's the important part of these deals, is the structure and the exclusivity around these AI providers. But yes, data is the gold here. That's why we've talked about this at length. Eventually, the individual is going to be compensated for their data in a way that we're not right now. Ultimately, it's who knows, could be the UBI of the future. But I think that's the key element. Just because you're announcing the deal to get data or to have a data partnership doesn't necessarily mean you have exclusive rights to that data, which gives you a leg up competitively.
Okay.
So I wouldn't go down the rabbit hole and just say, yes, this is a competitive advantage. I think OpenAI is first and foremost capitalizing on the first mover advantage, and the fact that they probably have the most well-developed large language model. I've heard Llama 3 may be up there or better. Who knows? I always hear things. But I think in terms of use case and who's using it and how far it's developed, OpenAI, in my opinion, has got a lead there. And this is really important for them to continue to stretch that lead, is to continue to build out in primarily exclusive data relationships. And I just don't know enough about it to say that that's what they're doing. I would imagine, but I don't know.
Right. Nick, what do you think? Like, what are the premier? You're the technologist, right? And to a certain degree, on the phone,
Sure,
right? You're running a data tech company. So what would be like the premier data sources? If you're building one of these models, there's Hugging Face, right? But Stack Overflow, Financial Times, there's other kind of news publications. There was some buzz about YouTube earlier, right? Training off of the videos, but there's probably, you can count them on maybe two hands and 2 feet, right? How many like premier data sources there could be to train these models? Is there other ones? Am I not thinking about this the right way? What do you think?
I really think it depends on what your use cases are, because you're going to need a lot of hands and a lot of feet if you really dig into a specific use case soundly. So one reason why I think Stack Overflow is so important is because you've got some of the big programmers on there constantly, or not big necessarily, but just a massive number of programmers that are on there with question and answer styled content. And if you can combine that
Right.
with the type of content you get off of GitHub, which is phenomenal, right, for code base, and then if you can combine that with other things like a Reddit or anything else, you're going to really start to dig a nice path to being able to make your OpenAI model start to give you code as an output, right? You could start to work through code base. If you want to go that YouTube approach, and I know we were all kind of freaking out a few months ago when we saw the generative AI making movies about dogs in the snow and amazing things like that. Then you want to bring in content from Paramount Pictures, from Netflix, from YouTube, from all those different sources. So I think we will do about as many fingers and toes in any one vertical. But these tie-ups are quite massive, and even if they maintain that strategic advantage of a few months, so let's say they have a 6-month exclusivity to the FT, 6-month exclusivity to Stack Overflow, that counts. That's a really nice head start on those models, I think.
Okay, cool. All right, let's talk X real quick. This there's something going on with this company. I'm almost ready to call it like a sleeper. I think it's a sleeper, right? Like I think everyone's kind of said Musk bought this thing for $44 billion. Fidelity just marked it at 12.5. Nikki, I know you love talking about the mutual fund marks, right? And we had a big discussion about that, I think, a week or two ago. That's right. I mean, that's down 71%. But there's something going on with this business. So just a few thoughts. So one, X owns 25% of XAI. XAI is in the market right now they're raising $6 billion at a $24 billion post-money valuation. And they're doing it, and they're pulling in the money, right? It's like oversubscribed from what I hear. They're also coming out with a TV app. So there's like, if you're on Roku or whatever, right, you could have like an X app on your TV. My kids and I watch YouTube on that TV app all the time. So that's coming for X, and supposedly it's supposed to have a YouTube-like experience. And then they got messaging, they got payments they're coming out with. They got 25 of 50 states. They have the payment licensing already. They're like news. Like this thing, Musk is trying to make this thing become like the everything app, and it's trending that way, right? So I guess the question is, the thing's at 44 billion, right? So maybe, Evan, we can start with you. Like Musk bought this thing for 44 billion, right? 25% of XAI is 6 billion. I don't even think that's included in that Fidelity mark of 12.5. So if you just like simple math, that's 18.5. I mean, does this thing have a chance of coming back and below and past that 44 billion mark? And if it does, what do you think has to hit for it to happen?
I mean, I absolutely think there's a possibility. Anything can happen. And when there's a person like Elon Musk in the chair leading the company, he's certainly known to pull off arguably even bigger miracles than that. So I believe there's absolutely a chance. I think that it will not be easy. I think that he's entering markets that are incredibly competitive, that have very large moats, that are capital intensive. And I think that he's always spoken about the ambition of having the everything app competing with what WeChat is in China. I just don't know if this is the sort of market. The United States is the market, or the Western countries is the market for that, where we already have big technology companies like Google and Meta and Amazon or Uber who own these sort of spaces. So I'm skeptical.
Right.
I do believe that it's great to have competition in the space. I think that Elon pushes the boundaries of what's possible in a lot of different areas and sectors that he operates in. So I'm excited as a user, as a paying user of X, which if you had asked me 5 years ago if I'd ever pay $1 for a subscription to X or Twitter, I would have never done that.
Right.
And now look at me, I'm paying, almost $100 a year for it. So look, I think that there's a lot of opportunity. And when you have great minds, great product leaders, and they bring great talent into one room to try to build something, anything can happen. And so look, I'm excited to see what you can do. And if you're an investor at 44 billion, you've got definitely a ladder to climb. But when you have tools like AI, like a lot of things can happen. So let's see what you can do.
Right. So Clint, like if you think about the valuation multiple on a business like this, right? I mean, it's not AI. That's where the hot dot is these days, right? They get the big multiple because I mean, XAI is. I mean, I guess they could sell data. They could sell the data. It could be AI play on that end. But I mean, with the payments, with the entertainment, I mean, entertainment and all this other stuff is advertising. That's kind of like what and Twitter have done for a long time, right? I mean, are any of these businesses like catching your attention to say like, hey, I pay a premium kind of valuation multiple on it?
No, not individually. I think the premium is in the platform and what is he going to do with these businesses? And I think if you look at it through the lens of AI, his investment in AI, his ability to raise capital, that's going to be a capital game to Evan's point, right? And there is no one that has proven better at raising capital than Elon Musk because he has a track record of executing. You can argue the degree of execution, whether you like it or not. That's perspective. But his ability to raise capital is unmatched in hugely competitive, capital intensive industries. And so I think what you're seeing here is him building out a platform to gather as much data as possible in terms of ex users and even new subscribers and their behaviors so that he can layer on AI on top of it and continue to offer more individualized experiences. And I think that has a premium in the marketplace. And I think that platform play is where the value is. And I think ultimately, in my opinion, I think it'll eclipse the 44 billion because I think he's probably got in X one of the most valuable data sets that you could have. I would say Meta and X are incredibly valuable. And if he can continue to keep people using the app, guess what? He's going to get more and more of that data. And he's going to be able to do more and more with that from an AI perspective.
Right. Well, the one thing that WeChat has that, I mean, I don't think anybody has it really here in the United States is they have these things called mini programs, which are like mini apps within the app itself. So like you can go shopping, you can do anything on WeChat. It's like crazy in mainland China, not here in the US, but in mainland China, like, there's like, so the equivalent would be there's like, a Target, a Best Buy, an Amazon app inside of X. And you just buy and sell and do everything inside of there. So my friends in China, when I was there, when I used to spend a lot of time there, man, they would just take their phone with them. They wouldn't even take their wallet anywhere. That was it. They just lived off of that phone. So Nick, let me ask you this, man. $12.5 billion valuation from Fidelity. This thing's at 44. Like the people that I talk to, because every once in a while I'll get somebody that calls me and says, hey, can I buy X? Right. And they are like super bullish on it. A lot of it, I think, is frankly like politically motivated. Right. So you get some people who are like really into like free speech and they're like, I want to get in big on this. So I'll get an advisor that calls me and they're like, I got $2 or $3 million for X, and they like want to buy it. And they're like huge conviction on it. But it doesn't trade, man. It's like, I don't see any liquidity on it. And my thesis is I don't think we're going to see any liquidity on it until we get closer to this 44 billion, right? I mean, what are you hearing? Are you hearing anything in the market around X and just where it's trading at, and if existing shareholders are looking to sell or what they're doing?
Yeah, I will say this is not the hottest name out there, and maybe just because it has been beaten up and there's so much disconnect between where large institutions are valuing it and where kind of Elon has valued it at that 44. And it's also interesting that you brought up WeChat, Meta was brought up. I mean, any of these platforms also just dwarf Twitter. So I think a lot of the value that they would have in terms of being the all-in-one source are just so much smaller than what you can get between WhatsApp plus Instagram plus Facebook Messenger in isolation. So even X right now has like only 60% the monthly active users of what Facebook Messenger has. And if you think about that, I would assume, so this is not something I know. The other stats are from Statista. It's all public, really, really quite clear. But I would assume a younger user base is going to be less reluctant to actually put their banking through or put other aspects of their life through an app. And I don't know that Twitter has that advantage on WhatsApp or Instagram, right? Where I think people live on that thing, or TikTok, and naturally that's changing in the US. So So yeah, I don't know that we're going to jump to that 44, nor will we necessarily see a ton of secondary market activity until we get a little bit closer there. But it could be a sleeper where you wake up one day and there it is. It's at 45, and then everybody's freaking out and wanting to buy it.
Yeah. I'm like super interested in this name. I think I might fall kind of closer to where Clint is on this one. That's why I guess I'm calling it a sleeper. I think it just might sneak up on everybody. He's gonna, and Evan said it too, man. It's Elon Musk. This guy's like a magician. He'll figure it out, right? So I'm not quite sure what it is, but I'm like super intrigued. Like he came out a year ago, 2 years ago now, I guess it was, and he said he wanted to make this thing an everything app, and he's like methodically moving towards multiple different business lines that didn't exist within that ecosystem before, right? So I'm intrigued on where it could be in 3 to 5 years time.
Aaron,
and if you were investor in me, go ahead.
If you were going to advise clients to invest into it or potentially buy shares in it, what valuation would you be seeking?
Yeah, it's funny. So so first of all, it'd be the 12.5. I did do the search. I mean, there was one or two people out there that were looking to sell, but they were in like the $34 to $35 billion range. So like much different than the 12.5 that Fidelity has it at. So, and then of course I explained to them and they're like, well, let's do it. And I'm like, okay, so just so you understand what that means, we're going to buy it in the fund at 34 billion. And then the auditor is going to come in and make me mark that down to 12.5 where Fidelity has it. And we're going to show like a 60% loss. I'm like, and that's what the statement's going to say to the shareholder. I'm like, are you sure you want to do that? They're like, okay, I think I understand what you're saying. I'm like, yeah, that's a massive premium to where you're probably going to have to market. I mean, I guess I could justify the valuation at the higher mark of what we bought it at, but I don't know how long I could keep it up there that high as the GP, right? So I mean, like, look, Evan, when I talk to people about this, I say, look, we could buy it at 34 if you want to. The play is like, do you think it's going to go to 100? And if it does, what businesses does it have to be involved in to get to 100, right? I mean, if you're doing a 20 times revenue multiple, which is high, I think, if you're talking about an advertising business, that's very high. If it's AI, maybe 20 times okay, right? But that means you're doing 5 billion in AI related revenue and it's growing fast, right? So this is a tough one. But there's something about it. Like this is where, fintech's not in vogue right now. So, maybe in a couple of years' time, fintech's back in vogue again. Now the payments thing's interesting. Advertising-based businesses, I think, are tough. I don't know. I don't know how strongly I feel about that advertise-based type businesses now. But, subscription revenue, Evan, like you mentioned, that was not a thing a couple of years ago. Now it's a thing all over the place, right? With these AI platforms and with X. So I don't know. That's like, I mean, that was just like a brain dump right there. I don't know.
No, I think you got your head screwed on right. And you made a good point. So let's say if you've got a company that does marketing and advertising that makes $100 a year, and then you call it an AI company, are you getting that multiple on the 100? No, you probably shouldn't. Maybe a fraction of it you should, but if the next 100 comes from that, there you go, and you start to adjust where your multiple will sit. I think you've said it in such a salient way. People have to really take that into account for these businesses that have been around for so long, have also been public, and now are just private again. You're coming at it exactly as I would, I think.
Yeah. Okay, fellas, let's end it there. I appreciate your time this week. It was good to see you guys. The four of us haven't been together for a couple weeks' time, so it's nice to get all four of us here on the horn together. I appreciate you guys.
Hey, thanks.
Great stuff. Great week.
Hey, thank you.
Okay. All right. Cheers,
Thanks.
fellas.
See you guys.